Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, we have John Berlet. John is a general partner of Tandem Trust Real Estate LLP and the Coastal Bend Oz Fund Manager. Thanks for joining us, John. Can you start by telling the listeners a little bit more about yourself and what you do?
Oh, sure. Thanks for having me, Gary. Again, my name's John Berlet. I'm a fund manager. I had a financial planning practice in Austin for 40 plus years and had an exit. Long story short, I had a law firm acquire my book of business, resulting in an eligible capital gain event. So I relocated. It's kind of an interesting story. I took off in a motorhome, traveled 17 states looking at these designated opportunity zones all over, hundreds and hundreds of them.
Awesome. So you obviously picked a place for your Oz fund. Where'd you find the most advantageous place?
We explored 17 states. We went immediately. When you sell your business, what do you do? At age 62, we went to Las Vegas, bought a motorhome off the showroom floor and traveled right when COVID was breaking out. So it was really awesome. We could sleep in our own bed every night, not check in to worry about, what shape the hotel's in. And so we traveled. We left Vegas, went all through Nevada, Colorado, California, through the Midwest, up the Northeast, down through down to the Gulf Coast, Biloxi area. Actually put contracts on properties in Colorado, northwestern Colorado, and Biloxi, and then made our way through Texas a couple times because I went to high school in San Antonio and spent all my adult life in Austin. So we were headed down to the Boca Chica area on the border where Elon Musk has the SpaceX operation, and this would have been about June or July of 21. And realized all the speculators had gotten there before us and driven the prices up sky high. And so we made it through this community called Rockport, which I'm anxious to share with your listeners why I chose this town and why it's a great place for my capital.
Nice. We'll circle back to that because you sold your business, you have all these capital gains, and so Oz Fund, creating an Oz Opportunity Zone fund really helps mitigate your taxes. So why don't you talk about that and how it's typically probably more for like new construction because you have to double your basis. But why don't you explain for our listeners that don't understand what an Opportunity Zone fund, you're a perfect example of why you want to start one.
Sure. So I had been hearing bits and pieces. It's a relatively new tax incentive. Came out of 2017 Tax Cut and Jobs Act. And I decided to do a deep dive when it affected me. And I'd done a couple 1031s exchanges over the years and understand that. In fact, I consider myself a safe money guy as a retirement income planner, Roth conversion guy with a passion for real estate. So it's a good fit for me to look at real estate. The incentive, for those of you who may not be aware, is if you deploy eligible capital gains from the sale of any asset, crypto, stocks, real estate, inheritance, sell your business, anything subject to either short-term or long-term gain, if you deploy that some or all, it's not like all or nothing, you can deploy in one of these low-income census tracts that have been certified by the IRS, chosen by each state's governor. Then you can defer that gain now for what is about 4 years. You end up paying the capital gain bill in 2027, but in theory, you're using the money for those few years instead of Uncle Sam, and hopefully growing it. So that's one of the incentives. Another one of the incentives went away. That was scheduled to go away in December of 21, which was a step up in basis. People may still hear a little bit about that, but it's no longer available. The second incentive, and the biggest incentive, in my opinion, is if you hold that asset for 10 years and then on exit, all the appreciation, all the gains are coming out totally income tax free on exit. The third and underutilized benefit is that there's no recapture depreciation all along the ride. So probably most of your investors are familiar with depreciation and accelerated depreciation and that sort of thing, whereas it still applies to real estate in opportunity zones, but you don't recapture that when you sell. So that's another incentive.
And for our listeners out there, so really what John said, really important is it could be the sale of any the Bitcoin, a business, just doesn't have to be real estate. So that's the beauty of the Oz Fund and holding it for 10 years. Tremendous tax benefits. The way I understood it a few years ago was you had to double your basis though, and so it really worked better for a property that needed a ton of work or like new construction. Is that still the case?
Yeah, that's very applicable still. Yes. A friend of mine, Ashley Tyson, who's kind of a national expert in opportunity zone space, he says it like this. He said, imagine if 1031 and Roth got married and had a kid, they named him Oz. So it's like a Roth on steroids, but the regulation requirement to double your bases. In my case, we bought an old hotel that got hit by Hurricane Harvey and needed to be demolished anyway. So we're going ground up, so that doesn't apply in our case. But if you bought an existing building or existing property, apartment community, say for $2 million, you have to ascertain the value of the improvement, back out the dirt, and then double that in what you call in improvements. Yeah. And then you're home free. So it's not for something you're going to only add value add 10-20% to the project.
Yeah. And I like you used air quotes when you said low income areas, because there's certainly areas that are not low income that are designated opportunity zone.
Yeah, let me touch on that just a little bit. The area I ended up stumbling across, called Rockport, Texas, is a very popular family destination vacation it's the #1 fishing community in Texas. But the reason it was certified, it had to be in the lowest 25% income census tract based on some pretty old data, 2010 census data. So they're using 8-year-old data in 2018 when they certified these locations. But what made Rockport an anomaly, it sits in a county called Aransas County on the Gulf Coast of Texas. And 85% of our county was designated and certified opportunity zone. And the reason is there's so many people have second homeowners here, Gary. They they file their tax returns in Austin, San Antonio, or Houston, which are all about a 3-hour drive, or even Dallas. So it kind of skewed. It's a bit anomaly. It's so many second homeowners that don't report their incomes here. So it ends up the people that do live here are more retirees, service workers. 10,000 population, we have 6,000 RV spaces. Also, an interesting trivia is with the population of 10,000, 750, 7.5% of the community make their living as professional fishing guides. That's an interesting stat, isn't it?
Absolutely. So, what kind of projects are you besides the ground up, are you doing any other Oz projects?
Yeah, we've acquired 2 properties so far, basically just dirt. We're 100% focused right now on this Blue City Paraiso, which is a unique boutique hotel that's designed after a city in Morocco called Chefchaouen, or the Blue City. And it's the highest and best use of the dirt, no doubt. my first thoughts when I bought the property was long-term rental. And after moving here, being a part of the community, after a short period of time, I realized it's not the highest and best use. That short-term rental was the highest and best use of this site because it's just 3 blocks from the bay in the tourism hotel district. So everything nearby is single family up on pylons, short-term rental, Airbnb type stuff. And that was our second idea for the property. However, after that, we decided a boutique hotel is really what the community needs. There's been no new inventory built here since before Hurricane Harvey. And we have 3 opportunity zone qualified QOZB business income streams within the development, one being a rooftop lounge, the other is a conference center, and then a very high-end spa. So we're catering to the middle to upper class travelers who want to visit the coast, maybe work from home. It's a pretty broad market, and that's no doubt the highest and best use. I have no background in hospitality, so it's something that I'm looking to add someone to my team with some hospitality space, and also other C what do you call it? C team members.
So, how many units are you looking to build out, and what's the cost of this project?
There's 60 doors, and the total cost is 16 million. We're looking to raise 8 million in debt and 8 million or secure. We do have commitments for 8 million debt and 8 million in equity. The interesting piece is we have just 3 floor plans, and they're all contiguous. So someone can, in essence, the larger units, 20 of those are 2-bedroom, 2 baths, and they're almost 1,000 square feet. So it's full kitchen, very nice, large units. 20 also are 1-bedroom, 2 baths. And then we have 20 studio units, and they're all 3 contiguous. So in essence, a family can, or gatherings, groups, reunions can house in the same property as much as 12 to 14 in one booking, one location. So it's 60 doors total. And go ahead, did I answer that question all right?
Yeah, I was going to ask. It was pretty unique that you have a 1-bedroom and 2 bath. Why did you choose that type?
Because the living area can convert for sleeping, and maybe 2 couples want their own bath, and kids and showers and that sort of thing. I do have a little bit of background in multifamily, and I know 2 baths better than 1.
Yep. I have a bunch of properties where it's 3 plus 1, and certainly I'd love to have an extra bathroom in there. Unfortunately, it doesn't. It was priced in when we bought it, but yeah, always would love to have that extra bathroom.
Understood. Are you in the Phoenix area?
Yeah, we've done all of our deals in Phoenix and Tucson.
Wow.
Yeah.
It's like you've accomplished quite a bit. How long have you been focused in this space?
I've been full time for about 7 years now, and we've got a great team. But my listeners want to hear about you, so let me be asking you the questions.
Right.
So, as a fund manager, what are your main responsibilities that you have?
Well, by far being a fiduciary, making certain the site gets fully permitted is probably high on my list. And we are just recently got the site plan approved by the city of Rockport. After 4 months, was submitted January 20th. Just got it 2 weeks ago. I didn't understand or didn't really estimate in a small town that would be that long of a delay. Austin, it's to be expected, but here in Rockport, it's some remnants of the good old boy system. And I'm the new guy in town, so I'm kind of like having to break through that. And I feel like I've finally broken through. Just FYI, I was recently appointed to the Chamber's Tourism Development Council. And this community is all about tourism. They don't want refineries. Between us and Corpus Christi, which is 30 miles away, is a lot of refineries and industries like that. And Rockport doesn't want it. All they want is tourists. It's a birding destination, a fishing destination, beach, the #1 beach, only Blue Wave beach in Texas, certified, a real clean beach. But back to what I had to learn and my obligation, my responsibilities are, is, of course, getting the capital stack put together, getting it fully permitted. I'm confident we're somewhere close to 70% along on our construction drawings, our structural engineers. We have not engaged the windstorm engineer yet, which we're on the coastline. And that's an interesting subject. Hardly a week goes by, some potential investor doesn't ask me, why would I build in a hurricane-prone area? And to manage that risk, part of my job is risk management as the fund manager. So two things. We're building with ICF insulated concrete foam construction, so it can withstand up to 185-mile hurricane winds, and did. There's some properties built here that were untouched in Hurricane Harvey. And then secondly, there's about 9 counties on the coast of Texas that require their insurance from the Texas Windstorm Insurance Association, quasi-state agency called TWIA. And the insurance premiums are significantly more manageable using the ICF construction, which we're going to use. So we have a wall that's about a foot thick, 8 inches or so of concrete, steel, 3 stories. We're going up vertical. I don't think I mentioned about the rooftop lounge. Did I?
Yeah, you did. Yeah.
Okay.
Nice. And so the ICF, does that cost more or?
Yeah, I think the cost is more so in the labor and the skill applicator pool. The material with the cost of lumber, it's leveled back down, but I think the time that you save, I watched some videos on the stick frame project versus the vertical panels on the ICF, which most of them are horizontal block. We're leaning toward the vertical panels because you can cut the height at the factory, and our first floor is like 14 feet in the commercial building where we have the conference center, the rooftop lounge, and the spa. The spa is going to be really off the charts. It's all no hair, no nails. It's hydrotherapy, saunas, vishes, argon oil treatments. So really high-end massage, that sort of thing.
Yeah, I read about ICF recently, and not as, and I might have this wrong, but not as hurricane resistant, but as a tool to like speed up, construction and whatnot, because it's like a little bit prefab, basically,
Yeah, the key really, I'm convinced on that, is the labor pool, finding the skilled applicators. And I've been in contact with several. It's become so popular here along this area of the coast because it is, hurricane prone.
So, John, what are some of the biggest lessons that you've learned by setting up this fund? Because I know a lot of our listeners also are interested in setting up funds and stuff like that.
I think in hindsight, one of the things I learned was in the capital raise aspect is not to emphasize on the OZ as much, because as it turns out, more than half of our equity so far is from non-eligible opportunity zone money. The OZ, and that was my total emphasis in the beginning, is, it's really a wonderful, huge tax incentive for those who have eligible gains. Are you familiar with a firm called Caliber by chance?
Yep.
Okay, Caliber just went public, and they are one of the big boys in the OZ space. And then there's Bell Point, who's another one that went public. So opportunity zones are becoming more and more common and heard of, and family offices are starting to understand, for legacy money. But in hindsight, I think I wouldn't emphasize the opportunity zone incentive. At the end of the day, it's a real estate play. It has to make sense on that basis. So now we also, another learning thing, I came up with original name of our project called Blue Zone Resort. And we ended up having to rebrand. There's an organization out there called Blue Zones. Have you heard of them by chance?
Yeah, so I think I live in a blue zone where it's like healthy living, stuff like that.
Yeah. Yeah. There's only 7 locations in the US, and I had no idea they had plans to build a hotel. So they had a trademark, and they appealed or protested against my trademark. So rather than fight them, we rebranded to Blue City Paraiso. And weren't never really, we came up with the blue zone based on opportunity zones, and this blue city in Morocco thought it was the right name, but unknown there was well, here's another lesson I learned. We hired a internet trademark firm for like $399 to do the trademark search, and turns out we should spend a little bit more and get a trademark firm that digs a little deeper, and could have turned up that there was some problems associated with the other name. But we have rebranded, and everything's on go. We have no issue, no compliance issues, no problems like that. We feel like we'll be fully permitted by September, shovel ready, and we're bringing a product to the market that doesn't exist. There's really no new inventory. There's some good locations, but for some reason or other, the operators don't choose to upgrade and beautify their properties, and I don't understand that at all.
Well, sounds like.
I'd like to add also, Gary, we had a feasibility study produced maybe 6 weeks ago by a third party that came in unbelievably favorable for our project and off the charts. As a project fund manager and founder, I'm real excited about the project, but to have a third party come in and perform the feasibility study and come back so favorably was pretty exciting for us.
That's awesome. Out of curiosity, what was the cost for that study, and how long does it take?
It was $7,500, and they put it out pretty quick. I want to say 2.5, 3 weeks. However, I had a USDA lender involved, and still do, and they wanted it tweaked a little bit as far as some components, and the firm was willing and didn't charge me any extra to make those tweaks for the lender. So it's a good tool for the investors, to rely on. It really covers the scope of our market and where we can serve the market here and get and have the returns that we're projecting, which is 18.84%.
Nice. Well, John, I appreciate you coming on, talking about some of the basics of an opportunity zone, your project, and some of the lessons that you learned. Very insightful. Please tell the listeners where they can find out more about you and your company.
Well, thanks again for having me on Break of Day Capital. You got a dynamic audience, and I'm happy to share a few minutes with you, Gary. I have a website, Coastal Bend OZ Fund. Also, we have offering documents on a platform called Syndication Pro. It's only for accredited investors, by the way. We're a 506C for accredited investors only, with a minimum of 50,000.
Awesome. Well, thanks so much, John. This is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.